The amount a company earns is critical to its future business operations, and the amount earned by sales is known as revenue. And this is the topic for today's Learn Trade 212 video, so let's get into it. Consider that you own a business. Each product is sold for £1,000 and you sell 300 of these within 1 quarter. This would mean that you made £300,000 worth of revenue. If in the next quarter you sell £330,000 worth of product, your quarter-on-quarter revenue growth for that time period would be 10%. And you can also apply this to annual growth as well. To find your company's revenue on Trading 212, open up the app, find your company, scroll down to key ratios, and you'll find your revenue. Here for Google, you'll notice a whopping 161 billion, and this represents their latest annual revenue. If you select all ratios, slide across to growth. Under revenue, the first line will indicate how much revenue has changed. This is the most recent quarter versus the same quarter this time 1 year ago. And we can see it's around 13%. Why is revenue an important measure to analyze a company's performance? Revenue is one of the primary tools that judges how well a company is doing in terms of sales. If your company's revenue is growing, then that means you're selling more products and services, and with more sales, you're more likely to be turning a profit. Similarly, if your revenue is falling, then that means you're making comparatively less sales and you may need to reevaluate your strategy to improve revenues. With this in mind, as an investor, the company that you're looking at should be executing what they're forecasting to grow at. And if they're not, then maybe this company is not for you. It's super important to note that revenue does not indicate any profitability, therefore it's purely one single metric out of many to understand. I hope that was useful, and if so, please click like and subscribe. Otherwise, I'll see you next time.